Hi, this is Ray Evans. I'm with the Pegasus team at Infinitas Wealth Counsel. And in a previous video, we talked a lot about different asset classes and how different asset classes move in and out of favor. And we talked about how for most of the last 2 years, returns in the world have been kind of dominated by U.S. stocks, number one. But in particular, technology stocks that somehow were associated with artificial intelligence. So it is the end of first quarter or into second quarter 2025, and we have a lot of tariff talk and a so-called trade war going on. And so it's shifted, and people and investors globally are looking at different asset classes. We're going to talk a little bit about non-U.S. stocks and how this is likely to be a period that would have investors looking a little bit more favorably toward non-U.S. The first chart that I'm going to show you is the cumulative return over the last 20 years for U.S. stocks, developed markets non-U.S., Europe and the Pacific Rim, and then emerging markets as well. And you can see that in the last 20 years, about a 600% rate of return for the U.S. stocks versus about 400% return for non-U.S. stocks in developed markets. And it's interesting, it's not quite that clear cut. There are extended periods of time where one type of security or one type of asset class tends to outperform the other. And I think another way to look at this is to look at roughly the same time period and look at this bar chart produced by our friends at First Trust that show the periods of time of U.S. stock outperformance and international outperformance. And you'll notice for most of the last 17 years or so, you've had U.S. stocks dramatically outperform non-U.S. to the point that it probably makes sense right now, particularly in the teeth of a trade war, for investors to look at other securities that are priced at valuations much cheaper than the United States, and that also are going to benefit from some of the dollar's decline against other currencies. And again, that's non-U.S. stocks and bonds. If you'd like a copy of either of these charts, ray.evans@pegasuskc.com. But know that we're adjusting our models a bit to add more international and to take advantage of the cheaper valuations and the likelihood of the U.S. dollar's current decline versus other currencies. Thanks very much. Look forward to visiting soon.